Hello everyone. In this video, I'm going to tell you something about national income accounting. National income accounting is basically the starting point of macroeconomics. Before going to tell you something about national income accounting, I'm going to tell you the basic difference between microeconomics and macroeconomics. Microeconomics basically deals with the problems of individuals, whereas macroeconomics deals with the problems of the whole economy. Suppose if we analyze the income of an individual, then it would be a problem of microeconomics. But if we analyze the income of a nation, then it is a part of macroeconomics. So macroeconomics is the starting point of macroeconomics. Basically starts with national income accounting. So national income accounting describes various microeconomics variables such as GDP or GNP. The full form of GDP is gross domestic product and full form of GNP is gross national product. The whole process of measuring and recording various economic aggregates which give some indication of the economic health of a country over time is called national income accounting according to E.M. Jennings. Now we have to know the definition of GDP and GNP. I have already told you GDP is gross domestic product, whereas GNP is gross national product. GDP, the definition of GDP is the total value of all final goods and services produced within the geographical boundary of the country in the given year. Now comes the definition of GNP or gross national product. Gross national product is the value of all final goods and services produced in an economy in a given time period. Now we have to know what is the difference between GDP and GNP. GNP is part of GNP is basically earned abroad, but GDP is confined within a country. For example, if we consider the income of an Indian working in US, it will be considered part of Indian GNP, but not GDP. However, it will be considered as part of US GDP. Now, if we consider the income of an American who is earning some income, who is staying in India and earning income in India, his income will be considered as India's GDP, but it will be considered as US's GNP. So this is the basic difference between GDP and GNP. Now, if we see that the GNP or gross national product exceeds GDP or gross domestic product, then residents of a country are earning more abroad than foreigners are earning in the country. If we consider our previous example that if Indian is working in US, in that case, if GNP exceeds GDP, then the income that is earned by the Indian who is working in US is obviously more than the American who is earning his income in India. Okay. Now, before going into the details of national income accounting, we have to know something about the circular flow of income. Circular flow of income is basically a model of the economy in which the major exchanges are represented as flows of money, goods and services, etc. between different economic agents. Now, for example, in this case, we consider suppose there are three agents, for example, household, government, and firms. We are considering here a very simple circular flow diagram. Here, suppose that three agents are there, household, government, and firms. First of all, taxes are paid by the households to the government. Then social transfers are coming from the government to the households. Government pays goods, government purchases goods and commodities from the farms, and farms pays taxes to the government. Now, households used to purchase goods and services from the farms, and in exchange of that, a household have to pay some payments to the farms. And farms also, they are also paying factor incomes to the household, as because factors means mainly here factor is how laborers from the household are working in the farms, and those farms are paying some wages to the laborers, and those wages are considered as factor income, and those factor income is coming into the household. This is the simplest form of the circular flow diagram. There are many complicated versions of it. I'm not going to the details of all those diagrams. Now I'm moving to the next section, that is how we will measure the national income of our country. Mainly there are three methods. First method is value added method, second method is income method, and the third method is known as the expenditure method. We will discuss these three methods subsequently. First comes the value added method. Value added method is used to measure national income in different phases of production in the circular flow. It shows the contribution of each producing unit in the production process. Value added method is also known as product method, inventory method, net output method, industrial origin method, and commodity service method. Value added refers to the addition of the value to the raw material. Raw material means I'm considering here intermediate goods by a farm by virtue of its productive activities. It is calculated as the difference between value of output and value of intermediate consumption. So value added method can be, the formula is of the value added method is value of output minus intermediate consumption. Now let me tell you an example of the value added method. Let us consider the case of a bakery. Suppose only flour is produced to produce the bread. Flour is used to produce the bread. The bakery purchases flour as input worth ₹500 from the miller, and then by virtue of its productive activities converts the flour into bread and sells the bread for ₹700. Okay, so it is purchasing input flour of 500 rupees and selling the bread at 700. Okay, it means that the bakery has added a value of ₹200 to the total flow of final goods and services in the economy. If we calculate national income through value added method, and if we add the price of flour as ₹500 and price of bread as 700, then it will be a wrong calculation. In fact, we will overestimate the calculation. So we have to add the additional contribution of the bakery, that is ₹200. Okay, so we have to add 500 plus 200, not 700. Now let me discuss the problems of value added method. The main problem is the problem of double counting. Okay, double counting means counting an item more than once. As in value added method, we count the value of items in each stage of production. There is a possibility that we may double count an item. We will discuss this problem in details later on. The second problem is the limited field of application. Third problem is absence of proper income expenditure accounts. Fourth problem is to evade taxes. Even the large companies reveal false income expenditure accounts. This comes on the path of using the value added method. It is not possible to measure income of the employees in government administration by the value added method. Now I will discuss the problem of double counting in details. For that I am using this example. Suppose farmers produce ₹60,000 worth of wheat The farms then sell the wheat to the flour mills. The flour mills produce flour, which they sell to bakeries for rupees 1 lakh. The bakeries produce bread, which they sell for rupees 1,50,000 to retailers. The grocery sells the bread to consumers for rupees 1,80,000. Okay. If we add the value of output at each stage of production, we arrive at a value of rupees 4,90,000. The figure overestimates the value of output because of double counting. The flour, for instance, was made of rupees 60,000 worth of wheat that we had already counted. In fact, then the flour producers added only 40,000 to the production process. Similarly, rupees 1,50,000 worth of bread sold by the bakeries contains rupees 1 lakh worth of flour, which we had already counted in the output of flour mills. This means that the bakeries added only rupees 50,000 of production. In other words, value added by the flour producers is rupees 40,000 and by the bakeries is rupees 50,000. The wheat bought by the flour mills and the flour bought by the bakeries are called intermediate products. These are outputs of one farm or industry but are used as inputs by other farms or industry. The bread sold by the retail groceries is a final product. Now I'm going to the second method, that is the income method. Income method is of measuring GDP or GNP involves adding up various types of factor incomes. The income derived from factors like land, labor, capital, and entrepreneurial services are rent, wages, and salaries, interest, and profits, respectively. So, national income is equal to wage, which is paid to the labor, rent, which is paid for capital, profit, that is paid for the entrepreneurial services, and interest. There is obviously problem in the income method. The first problem is the problem of identifying the earning units, and the second problem is transfer earnings. Transfer earnings are those earnings which are transferred from the one to other. Third problem is false returns. Fourth problem is realization in current year of income earned in earlier years. And the fifth one is income earned from abroad. And income for sixth problem is incomes earned outside the market. These are the problems. Now I'm going to the next method of measuring national income, that is expenditure method. Expenditure method is that in this method we found out the total expenditure on the economy's output of goods and services, and various categories of expenditures as the following. I'm mentioning those expenditure. The first one is personal expenditure on consumer goods and services. Second one is business fixed capital. Third one is business inventories. And fourth one is government current expenditure on goods and services. Fifth one is government investment. And the sixth one is export of goods and services. And the last one is import of goods and services. These are the various expenditures, and these categories as considered. There are many subcategories under this. I'm not going into the details of those subcategories. Obviously, there are problems of there is this expenditure method. Problems are there. Okay, before going to the problems, let me just let me just tell you the formula for calculating national income through expenditure method. The formula is national income is equal to the sum of consumption, investment, government expenditure, export, and minus input. So national income according to expenditure method is C plus I plus G plus X minus M, where C is the consumption, I is the investment, G for government expenditure, and X is export, and M is import. Now comes the problems of expenditure method. The main problem is that in reality it is very difficult to estimate consumption expenditure and savings of all the earning units of the country. Now I will mention some important national income accounts identities. The first one is GNP. GNP is GDP plus net investment income from non-residents. The second one is NNP. NNP or net national income. NNP is at market cost, which is equal to GNP minus depreciation. The third one is NDP or net domestic product, that is also measured at market cost, which is equal to GDP minus depreciation. So we obtain NNP or NDP by subtracting depreciation from GNP or GDP respectively. The fourth one is national income, which is also known as NNP at factor cost, is equal to NNP, that is net national product, minus indirect taxes, minus business transfer payments, minus statistical discrepancy, plus subsidies. There are other identities also, that is personal income. We have to derive this personal income, and we obtain this personal income by from national income. National income minus personal income is equal to national income minus corporate profits, social insurance minus social insurance, minus net interest paid and provident fund contributions, and we add government transfer payments plus personal interest income, dividends, and other transfers. So, and personal disposable income, the last one, is obtained by subtracting personal taxes from personal income. So these formulas are very much useful for calculating various mathematical problems in national income accounting. This is all about national income accounting. I have just touched the topics. If you want to, if you want to study in details, you can follow various books, and I'm giving those references in my website. And if you have any queries, any problems regarding this this video or this national income accounting, you can contact me at this mail out ID, which is given here. Thank you all for listening. Thank you.